Good evening, everybody. This is the second attempt to record a video for this week, or I guess week-ish, just because I haven't really been consistent with it. But sometimes there's just not a whole lot to talk about. For this week, though, I believe we have a lot to talk about. So we'll just jump right in here. I think overall, what we're looking at is finally a turn. We have just looking at ES here, or the S&P 500, the futures ticker. We finally get ourselves to the point where we do have some selling, even though we've had this very straight channel here and we've had this, incredible run over the last couple months. Well, finally, we've had some volatility, and we're finally starting to see some sort of cracks in this narrative that the Fed has about about taming inflation, higher for longer, whatever is convenient at the time to explain whatever price action we're seeing. I think overall, nobody really knows how deep the correction is going to go here, but yeah, typically we'd like to start out at the 0.236, which is pretty much where ES is right now. We'd like to see some sort of bounce. It'd probably sell through this 0.236 here, but once it does bounce and you get some sort of B wave that we see here, ultimately, hopefully, we see this 49.15 level. Now, this is also the same level that we would have some sort of support, where we did have that tiny little, couple day correction here, which is really not correction. It's more like it's more like a pinprick in the grand scheme of things. But we have seen a turn, and you can see here with the volume that we're starting to increase. So just to keep it short, right in the middle of the week here, or at least starting out the week, you get to the point where you start to see, these different indexes behave differently, um, or I guess like relative to each other. So we're starting to see this like downward channel. We also saw like this diamond top here, and we also saw this sort of head and shoulders pattern develop. I think I mentioned a couple of, I think last week that we were seeing this sort of pattern develop, but the reality is it actually played out. So I would say this diamond top is not super reliable, but I guess in this case, it actually did work. But I'd say about like 60% of the time, we actually see these come to fruition. Now, when we're talking about this sort of correction here, it kind of looks like I don't want to say like a zigzag because it really doesn't look like a zigzag. It looks like a leading diagonal or just a whole lot of chop. Um, but the most important part here is that it broke through its lower trend line, right up here, and it just continued down. So we get to the point where we're getting close to the target one here, which is in the grander scheme of things, this 5076 level. This is the 0.238 level, where, sorry, 236, where we see just slightly, slightly above here. But I think it's likely a foregone conclusion that if we're using this B wave top here in this drawing in white, if we're using that as a like a B wave top, we do see some sort of extension beyond this, this 1.236 level, and then you also see continuation. I mean, we saw a bounce, but or like at least a I don't want to say a bounce, more like a rejection, but we do see a lot higher volume and we see a lot more higher sell volume today. And I think when you look at something like the S&P, sorry, the Nasdaq, the Nasdaq just sold right through this lower trend line. It was, kind of bopping around here over the last couple days, but we really did see the final move here, where we see a lot of this consolidation, a lot of this, a lot of this grind. But I think we're finally off to the races here. Um, I can see a situation where we might have like a bounce, and then maybe another turn down where make no mistake, this is going to test this lower level, this 17,500 region. Um, people that say, oh yeah, it's going to keep going up for forever. No, it won't. But now that we've had this turn, we can actually get some sort of validation that the bears who have been hibernating for 5 months finally get their finally get their bear profits. The gains one we've done pretty well over the last couple days here, banking some profits, but also adjusting positions in order to, capitalize on the downside. Um, again, just to try to reinforce the point here, we did see this sort of like ABC move, but what I'm starting to think here is that we might actually not see an ABC. We might see something like a wave three. And if we do see this wave three, what we might see here, or at least like I think what we might have already seen, is this sort of move. Now let me change the color so it's easier to see. Now this is not, not an exact science, of course, but um, I do think that we'll see some sort of selling. Sorry, I mean like a continuation of selling. But we're getting to the point where we see this, where we see these certain fib levels here on a larger scale. Again, like this 17,740 level, 17,130 level. These are all relatively reliable fib levels. So with respect to, excuse me, with respect to those, sorry, I'm still not feeling well from the weekend. I've had a cold here last couple days, so I apologize for that. But we once we're off to the races here, which I really think today was a like a pretty solid confirmation that it's off to the races for selling. Um, I still don't think that we're going to see like a massive sell off here, um, but I do think that we will have some sort of test. Now, if this is some sort of wave three, what we can expect to see is probably another continuation down where people don't really people don't really expect it to go down as far as it actually does. But once you start getting to these lower points here, you're going to start to see some more resistance. So I'm kind of thinking here that we will see, sorry, I get my controls, there we go. Kind of thinking what we might see is just a really quick, sorry, let me get my drawing tool. I'm failing bad at the video tonight. You might see something like this where we hit this 1382 level, which is really the extension. If we do measure this as a C leg, which it looks like, it doesn't really look like a five-wave impulse down, but it's possible it might turn into that. I think what we might see is some sort of bounce like this, and then that might be where we see a larger ABC. And I do have this level here, so I'm thinking that this is likely the case. We could see a little bit more downside, but we're eventually going to see this, this ABC sort of move if this 5 series down doesn't materialize. And I think the easy way that we're going to be able to tell whether this is going to be an ABC or if this is going to be a 5 series down is going to be more around how far this wave carries us. If it carries us beyond here and we see something like this, I think it's certainly realistic that we won't really see a B wave for a while yet. Maybe even until May, and you would still see some sort of correction like this, where you would see a higher B wave, and then ultimately, maybe this termination point here at the C level. But how you play these things is it doesn't really matter what the first leg down is. It matters like what the wave count is in the first leg down. But then when you go up to the B wave, like what is that retracement level? So let's assume that we get down to this level here. We could see retracement up to the point of control, which is the dotted line here. We could see slightly lower, 18,200. But at this point, I'm thinking, we might see this. We might see a bump up against this trend line. So thinking maybe towards the end of May, we might have a rally. Or, sorry, like throughout May here, and maybe the second half of April is a little bit more selling. But if we see something like this, where it's like a 5-wave structure that turns into a larger, A wave down, then we could reset some longs and capitalize on this retracement back up top. At least right now, that's the current thinking. So let's head back to ES. It's a very similar setup here, but I still think the termination point is going to be probably a little bit lower, and then we might see this higher retracement for a B wave, and then ultimately this test here. Now, this actually makes a little bit more sense when you zoom out. So you say gains. Why are we stopping here at this, 0.382 level? Well, I kind of think we might see some sort of, wave four. We might see some sort of, price action here that, stays confined within, typical wave four zone, or we could see a further sell to this, 0.5 retrace here, which is around like the 47.86 level, which would typically mean like a further like a further slide here for the A wave, maybe even slightly lower for the B. But ultimately, this is kind of what I'm thinking here. And if you look at something like Nasdaq again, you'll see that this is really the key move right here. Once this thing pierces that lower trend line, that means this expanding megaphone pattern, whatever you want to call it, ending diagonal, doesn't really matter. It's done. It's toast. Finally, mercifully, it's gone. Um, so let's take a look at some of these other indexes here. Let's look at the Dow. Dow's actually performing very, very well with this projection, and it's getting pretty close to testing this prior this higher degree wave four low, and that's almost automatic. So again, if we're looking at something like ES, we're going to get here. We are going to get to this level. This is not just a one-time thing. And also too, if you look harder, you can see that there's a head and shoulders pattern here, in addition to the diamond top that we already talked about. But if we look at something like the Dow again, you can see that these are relatively consistent for equities. And also, if we look at ERDI or the Russell 2000, you'll see that we have some pretty pretty decent selling. Um, this has been a pretty beastly channel here. It's been kind of irritating, but at least if you're short, right? So we're very, very close to getting out of these shorts here for the small caps. Pretty much like everybody got fooled, on the way up here. It's just a rally that would never die. But I think that this rally here with the Russells is definitely toast. I mean, even if you look at the Dow, you just look at it like all ships rise and fall with the tide. So eventually Nasdaq's going to catch up. I mean, it has a long way to go, but it's also been keeping the market propped up for a while. So once we get to the point where we start to see these tests of these prior degree wave four lows like this 17 500 zone, that's when we really start to see what the correction has in store. So I think that that it's possible this correction takes a lot of people by surprise, and I think that we might see a deeper cut here, but look at the leaders of the indexes. So like the Dow right now, I say is the top leader of the indexes. The volume is picking up here when it comes to the sell volume. You can see the red. You can also see some of the sell delta, sorry, the darker red is like the sell delta, where they're trying to test these lows, and they're also trying to test buy support. So the real key test I think is going to be once we start seeing this like a test of this low here, like this 37,740 for the Dow. This is also getting pretty close to the 200-day moving averages. Uh, one of these is just a simple moving average. The other one is exponential moving average. So I mean that's pretty much it for for equities. I guess the long story short here is that direction is down. We definitely turned a corner here. It's nice to have some volatility, um, but let's also take a look at some of these other tickers. So let's look at the 10-year. 10-year has been pretty interesting lately. As of right now, it's bumping up against its this upper trend line. Now, typically, even though this is labeled as a C leg, it's looking like it's going to be more of a impulsive sort of move here. So something a little bit more a little bit more pronounced, I think we'll likely see here. So instead of this C leg, we'll probably see this bounce. So even though it's like technically yes, it's an ABC, um, we still, I guess I could say here like we're targeting ultimately this 4.756% level And I think it could definitely get there. Like it already blasted way past this 4.611 level that I was thinking was gonna, was gonna pivot from. Even though we are seeing a rejection here, it's a small rejection, but it's still a rejection nonetheless. I think it's pretty much a foregone conclusion here that the yield's going to head a little bit higher. And because the yield and the dollar trade is a pair, the yield is also, you know, crushing it here and, headed well up to this, 106.7 region. I don't think that's unreasonable at all. And in fact, I think it's going to head up even higher. So maybe like this 107.168. So with that, with that being said, in conjunction with the yield, I do think that the yield's going to go up a little bit more. But what we're starting to do here is accumulate TMF positioning. So again, we're getting close to the top. We're getting close to a point where we might see some sort of like wave 4 reversal, or we might just see a reversal in general. These things just tend to happen out of the blue. So, um, long story short, just be on your toes with that. So let's also take a look at gold. So gold has been interesting. There's been a lot of buying, a lot of a lot of people trying to hedge their bets, or at least like you know try to hedge against inflation, or what have you, right? So I think right now what we're seeing here is the beginning stages of a B wave. So we might see some more consolidation here, but realistically, these B waves typically bounce at like these zero point 0.5 levels, and then they head back down. But I think what we're seeing is maybe slightly more of a retrace up, and we might be able to see this like a 5 series down, or like a impulsive wave down. I still think we're going to run into some support here. It's like 2231, but with gold rising and yields rising at the same time, that's really not realistic. Um, we're going to see something break. Either most likely it's going to be gold. The yield itself is a lot more powerful. It drives a lot of equities. It drives lots of different things. So if we're looking at gold from a I guess like from a trading or strategy perspective, um, if you haven't hit the rally yet, it's too late. Sorry guys, I hate to break it to you, but um, sure, it could travel up a little bit more, but I still think that you had a huge rejection here with a ton of volume. This is also another signal here that rallies up, guys. Or guys and girls, sorry, but rallies up. Let's let's try to find a good bounce point like this, and then short it. But with gold being so crazy on the upside, you probably wouldn't want to take out too large of a short, just in case it keeps traveling up here, because there is a case where it could hit this 2520 level. I mean, it's already had this breakout, but it still has to back test the breakout. And what do we mean by that? Well, let's go to the daily level. Gold's had this great run up, but there's also a case here that we could seize this ABC type of move here, which is certainly not unrealistic. I actually kind of think it's getting close to that, because I think we're in a wave 3 right now, when it comes to a larger scheme of things. So either we could have like a wave 4 pullback right here, and then it goes a little bit deeper, but we could either have like a wave 4 pullback, and maybe a smaller, or sorry, like a little bit larger of a wave 5, because typically wave 5s extend a little bit further with commodities, as opposed to like wave 3s, which extend more with equities. I don't really know why it is. It's just something that happens. So I think that it's possible that this wave 3 extends a little bit higher. I mean, it has to hit this, 161.8 level in order for it to qualify as like a wave 3, which means you'll have a more shallow wave 4 and a slightly higher wave 5. I think this is probably most likely what you would see here. But then after that, let's say rates start going nuts, you see like more of a corrective sort of move after that. But that could be fall. So I mean, if we're stuck short, which is where we're at the moment, um, I think you can easily make a lot of money here, just by you know just by hedging long here on any sort of simple pullbacks. But you still have to watch it. Like you can't just long and forget about it. So all right, now let's look at oil. So oil has been a little bit of an interesting sort of ticker here to trade. it's been in this ascending sort of channel here for quite some time, and getting to the point where either it's going to reverse or it's going to continue up higher, where this 88.66 level I think is realistic. Um, I think we're seeing this sort of the same sort of five wave pattern that we're seeing with like gold, for example. Uh, I mean, like it's not confirmed yet. It still looks like an ABC, but you could see something like this develop, where it's just a longer, wave three, and then you could see um, some sort of sustained breakout here. But we still have to have some sort of pullback, um, and I think that it's coming relatively soon. Because if we look at something like XLE or energy, we're seeing pretty big pullback here, and I do think that this is going to back test this triangle line. I think it's almost like a foregone conclusion here. So, for short, just hold on to them. I think you'll be rewarded with some pretty sweet profits soon. Um, all right, so let's take a look at some other sectors here. I don't want to beat this to death. Yes, markets are going down. That's it. That's the headline, guys. So right now, we're seeing this back test of this trend line. I think it's entirely possible, again for financials, that we see this sort of B wave, and then like another C down here. But you better, bet your uh, bet your life here that I'll be shorting this B wave up because with rates going as crazy as they are, that's a ton of unrealized losses on regional banks' balance sheets. I think that financials are just incredibly overvalued. So it's sort of like energy. I like people are broke and we're having a recession. People aren't going to be able to afford gas and stuff, right? So like people just won't pay the prices. So again, we're seeing these little pullbacks in the sectors. But I still think that it's not like the big sell yet. Um, I think that might take a little bit of time. I think that again, it's an election year. We have the summer coming up, which is typically kind of lame for equities or indexes, things like that. So we might just see some chop, and that is like hallmark wave four. But again, if we can expect that, or if it's confirmed, then we can make money off it. So I guess the good news is if we do see some sort of bounce here at these 382 levels, this is a huge money making possibility. So just take another quick little check here. I think that biotech's about to bounce. Um, I also think that industrials has a little bit farther to fall, but I guess we'll see what happens when it hits its 50-day moving average here. That's the purple line. All right, so I think that's enough. Again, my voice is a little shaky here just because sick last week and into this weekend. So I apologize for the crappy delivery. I didn't even have a lot of good dad jokes today. So unfortunately, that's what you get today. But I guess the long story short of the whole thing is indexes are they are turning, and if you're whole hog long, most likely you'll be able to exit those positions. But I don't think we're done yet with the selling. So I think if you think it's going to be a relatively minor or short correction, give it some time. So don't go long too early. Again, it's not advice, can't tell you what to do, but don't go long too early. Just watch it, have patience, and eventually the path will open up for you. So, all right, everybody. Hopefully the videos get better in the future here without audio issues. I apologize for having some problems with that today, but appreciate you sticking with me here. And yeah, let's make some money, everybody. Thank you. Bye.